Hi everyone and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Friday the 8th of October. Now it is non-farm payrolls Friday today. Markets tend to consolidate in the morning before non-farm payrolls, and it seems to be that is the case once more today. We had a nice rebound across equities yesterday. The risk appetite improvement came across a number of factors yesterday, but it's interesting that we're starting to see bond yields rising again and the oil price rising again. So can that rebound in equities continue? It seems as though that those two have been coming with fear trades recently. So how the markets respond, I think, to this payrolls report could be crucial today. Payrolls are expected to come in at around about 500,000 jobs, and also the unemployment rate improving to 5.1% from 5.2 last month. But I think that will probably be enough to rubber stamp the Fed's move on tapering asset purchases at the next FOMC meeting. So I think the markets would be taking it as fairly solid at that point. Now, in terms of how markets are moving, as I said, we've seen that risk appetite improve. The dollar's consolidated a little bit, and it'll be interesting to see how that impacts on euro-dollar today, because euro is one of our main charts that we're looking out for, and euro has been breaking down and not really managing to recover. We're also looking at the oil price today. As I said, oil had been falling last couple of days, but rebounded yesterday, and a sharp move to the upside suggests that maybe it's going to be retesting those highs again. And finally, looking at the S&P 500 futures, well, equities rebounded, but can that move continue? So let's have a look. And onto the INFINOX MT5 platform, starting off with euro-dollar. We can see that euro broke down below this key level of support around 1560 earlier this week, and it hasn't really managed to do anything in terms of recovery, risk appetite recovery. Euro seen as a bit of a safe haven play still, and euro still under pressure. And you can see that's interesting, because if you look at the likes of cable, which has recovered from its breakdown and consolidated around the old support, equally on the Aussie as well, consolidating around an old level of pivot. Euro-dollar is really struggling, isn't it? Euro-dollar wasn't able to really manage to recover. It fell back quite quickly and broke down again, and it really doesn't bode all that well, I think, for euro-dollar going forward. It really does suggest, I think, euro-dollar is still under further downside pressure, and if you sort of open up this to levels really not seen since 2020 in June, I think that could well be seen further downside towards the 14s level, maybe even 14 big figure coming in due course. But it certainly does look as though on euro-dollar that there is further downside, and bulls are not really managing to get any control on this whatsoever. Old support is becoming a basis of resistance on a near-term level, 1560 to 1570, but the main level of resistance you need to see of a recovery would be certainly 1640, I think. So onto the oil price. Well, oil fell back a couple of days, a big bearish engulfing candle. That's a really strong reversal signal, but there was a significant reaction higher yesterday. Really was a decent bounce, and I've drawn in this uptrend now. It's not perfect, but certainly you get a strong gauge that there is still this uptrending scenario, strong momentum still, and it looks like it's positioning for a retest of the high, which comes in at 84.10. And just going back further from that, you can see that the next real key high comes back from sort of July last year, and I think that, sorry, July 2018 actually, sorry, and 86.95 is perfectly possible on this chart, and I think that could well be seen. But if it certainly breaks out above that high of 84.10, you're well on the way towards that, considering the strength of the momentum you've got. Now, looking at the 4-hour chart, any reversals? Arguably a very slight possibility of a negative divergence there, but yeah, nothing really yet. And finally, on the S&P 500 futures, well, we've had 3 positive candles in a day. That is encouraging, but I've drawn in this downtrend. Essentially, it is just unwinding back to the moving average, which is the 21-day moving average, and also the downtrend. And look at that RSI, 50. So this is crucial territory for the S&P 500. It needs to hold above 43.88. That is the first thing it needs to do. And then it needs to now start to break that downtrend, break the 21-day moving average and move above 50 on the RSI. If it doesn't do any of those, or all three of those factors, really you're looking at this potentially being another selling opportunity, because this is an encouraging move, but if it falls over around this sort of level, yeah, you could see that it could quite quickly fall over again. So you're looking at probability of the 43.64 level of old resistance becoming supportive again. If it goes below that, I think that then starts to look more negative again to the downside. Thanks for watching this video. I hope you found it informative for your trading. Join me again on Monday. We'll be doing it all over again for a new trading week. So I'll leave you with the INFINOX support and resistance table, and I wish you good luck in your payrolls trading, everyone, and I'll speak to you then. Thank you very much.